Hello everyone! In today's video we will walk you through exactly how investors think when they read a pitch deck. We will break it down step by step so that you can understand what matters most at each stage of the presentation. So, whether you are a founder preparing your pitch or an aspiring investor evaluating opportunities, this guide will help you read between the lines and make smarter decisions. Here is how we will break it down. First, what a pitch deck really is. Second, the investor's mindset, what they are looking for, and a step-by-step breakdown of a typical pitch deck. Red flags and green lights investors watch for. Final questions investors ask before saying yes. All of this after our intro. A pitch deck is not just a fancy slideshow. It is not about pretty graphics or startup jargon. At its core, a pitch deck is a storytelling tool, and it has one single job: to make the investor think I need to learn more. So think of it as the trailer for a movie. It is not supposed to tell you everything, but it should spark you interest and leave you asking what happens next. Good investors know this. They don't expect all the answer from the deck, but they are looking for something specific. Signal over noise. So, the investor's mindset. Before we look at any slides, let's step into the investor's shoes. Whether you are a venture capital, managing a fund, or a solo angel investor, you are not just looking for a cool idea. You are looking for a return on investment, ideally a big one. What are they scanning for? First, they want to see evidence that this startup could grow fast. That usually means a big market, a strong funding team, and a scalable business model. Second, they are assessing risk. Every early-stage startup is risky, but some risk can be mitigated if the team is experienced, if there is an early traction, or if there is a clear go-to-market strategy that helps reduce perceived risk. And third, they want to know, is this the right timing? Is this market hot? Is there momentum? Is this a train I want to jump on? So let's go through the typical structure of a pitch deck and see what an investor is looking for at each stage. Slide number 1, the cover slide. It might seem minor, but this is the first impression. A good cover slide includes the startup name, a one-line summary, and contact info. Bonus points if that one-liner clearly conveys the value proposition. Slide number 2, the problem. Here, the investor is asking, is this real, urgent, a painful problem? Has it been validated? Is it something that a large number of people or businesses actually care about? Slide 3, the solution. This is where the product or service is introduced. Investor look for clarity. Can I immediately understand what it is? Is it different from what already exists? Number 4, market size. Big markets equal big potential returns. Investor want to see a total addressable market TAM that's compelling, but as well they want realism. So throwing $1 billion number isn't helpful unless there is a clear path to capturing part of it. Slide number 5, product demo or screenshot. A quick look at the product, even in a mock-up form, helps the investor visualize the solution. Of course, consider a bonus if there is a live demo or a minimum viable product. Then, slide number 6, business model. How do you make money? Subscriptions, marketplaces, software as a service, and so on. Whatever it is, investors are looking for unit economics that could eventually scale profitably. Slide number 7, traction. This is very important. Even a small traction, users, revenue, waitlist, partnerships, signals momentum. Because numbers talk, investors want to see growth more than they want to see perfection. Slide number 8, go-to-market strategy. How will you acquire customers, paid ADS, partnership, viral growth? Investors want to know that you have a clear, cost-effective path to user acquisition. Slide number 9, team. Probably the most important slide. Who is building this? Do they have experience? Do they complement each other? Maybe work together before? Slide 10, financial forecast. That means basic revenue projections, cost and assumptions. Early stage investors know this is a guess, but they want to see how you think, not just what you think. Slide 11, the ask. How much are you raising and what are you going to use for it? This needs to be crystal clear. Investors want to see that you are raising the right amount to hit key milestones. Of course, you can have other optional slides about competition, milestone, exit strategy, and this can be very useful, especially if you show why you are different from others and what your long-term vision looks like. So, chapter 4, red flags and green lights. So now let's talk about what sets off alarms or gets investors leaning in. Usually, red flags investors notice. Vague problem or unclear solution. No founder market fit. So why you? No traction or made up numbers. Your market is too small or undefined. Unclear business model and founders dodging hard questions. On the other side, green lights investors love. A strong and complementary team, a clear problem to solve, unique insight or innovation, a growing traction, a thoughtful go-to-market plan, realistic financial thinking. But remember, most of all, they want to see that the founders are coach-able, passionate, and focused. So that means that often a great team with a decent idea often beats a great idea with a weak team. So final questions investors ask. By the time an investor finishes reading a pitch deck, they are thinking about next steps. Usually that means a meeting or a call, but before they agree, they are running through a mental checklist. Do I really want to work with this team for 5 up to 10 years? Do I believe they can execute? Can this become a $100 million company? Is the timing right? Would I regret passing on this deal? And the last one, that's the golden question. If your deck makes the investor think, wait, what if this does work? Then you have done your job. So there you have it. Reading a pitch deck like an investor is about more than just glancing at slides. It's about asking the right questions, looking past the surface and connecting the dots between story, numbers and people. So if you're a founder, use this as your checklist to build a better deck. If you are an aspiring investor, use this framework to train UI and gut. And if you found this video helpful, don't forget to like, subscribe and drop a comment. Thanks for watching. See you in the next video.